Everybody, hoping everybody is doing amazing and doing great and ready for the week. So it's on the weekend, and as usual, what we do on the weekend. We do analyze the markets, ready for the other next weeks. So this week we had an amazing week. If you go through the previous videos, I did my analysis from there, and we had good lessons concerning being looking on our stop loss placements. I guess that was the major lesson for the week. But yeah, now preparing for the other next week, and I guess we can see the price action over here, and it's a clean price action. I guess to those who understand can see how why I am saying we have some clean market structure that has been previously formed. And without any further ado, let's start. Before I start, guys, please follow my channel and like this video, and also maybe with time, as we grow, we'll get to develop and maybe try to create ways how we can make to those who are new into this craft to understand more. But before anything, please remember to follow and like the video, and let's start. So this is the weekly time frame, and I guess from the previous videos, I don't want to talk about the previous video. I'll start this video as if I'm starting afresh, and let me get rid of these, yeah, and only remain with these buy side liquidity above them. So that is my general draw on liquidity. So you can observe what we had here. We had this reaction of these weekly order block. We had a rally up that created our market structure shift. To those who do not understand the market structure shift, is we see candle closure above the previous swing point. So we have this swing point, and what I refer to as swing point is whereby we have a candle's high. Let me use this marker of mine, whereby we have, where is that marker? And go further, whereby we have a candlestick, another candlestick, another candlestick. So assuming these are candlesticks, let me, yeah, another candlestick, and we see that we have these high, the high of this candle is lower than the high of this candle, right? Assuming these yeah, exactly, assuming this high is lower than this high, also this high, this candle's high is lower than this candle's high, meaning this is the highest high of these three candles. Now this is what we call a swing high. So getting rid of these, we can see we had these candles over here that closed above these candles, candle number 1, candle number 2, candle number 3, whereby we have this swing point above here. Again, we had this candle closing above this swing high, confirming to us that we have this bullish market structure shifter. Also, as you can see, we have bearish arrays that are being violated, and the bearish array that is being violated is we have this bearish order block, which is an up close candle, which is this bullish candle inside a bear leg, right? So this is our bearish order block, and the market tapped into it. It not only closed above the mean threshold or the midpoint of this order block, but also above that, right, above the order block itself. So these signals to us that we have a bullish order flow. Number 4 or number 3, we want to look for bearish arrays, not bearish, bullish arrays that are being respected. So we had this fair value gap here. The market never dipped into it, but we can see a reaction of these bearish fair value gap, right? It was a bearish fair value gap that was violated at first, but now since it has already balanced we have these inversion, this fair value gap now turned from being a fair value gap to an inversion fair value gap. It now supports prices higher, and if I draw it, I don't want to draw it, but if I make this marking from the high to the low, you can see how these candles were closing at around the low of that. Then we can see we had this reversal. This reversal also created another market structure shift, whereby we have this swing point, which is candle number 1, candle number 3, number 2, I mean candle number 3, and we can see this candle closed above the swing high, creating a market structure shift. So with all these, and also we are seeing this fair value gap here being used as support to support prices higher. Now these are bullish fair value gap that was dipped into and then supported prices higher. So we have lots of confluences as to why that we are bullish inside this bullish market, because we are seeing bullish arrays being respected, bearish arrays being disrespected, as well as we have that market structure shift, not market structure shift, the market structure showing us that we are bullish. So we want to focus on these price action over here from the recent past weeks. So we can see we had this candle number 1, candle number 2, and candle number 3, and what was created here, we have that weekly fair value gap. So from the lowest point to the highest point, exactly, we have our weekly fair value gap. Because we are bullish, we want to see these fair value gaps support as higher, and for us to confirm whether we have been we are respecting this fair value gap, we have to go to the lower time frames and confirm, are we observing the market structure? Is the market order flow now signaling that we should have that continuation higher, or we can anticipate a reversal? So that's what we will be dropped to the lower time frames to determine. But we have inside this weekly fair value gap, we always have a key level that we should focus on, and that is the midpoint. And that's why all my fair value gaps usually have that white line between two to show me the midpoint of that fair value gap. And this previous week had a good price reversal or good price reaction of that midpoint or the consequent encroachment of that fair value gap. What the market did is the market opened around this level, rallied, created a high, then rallied lower, tapped into that consequent encroachment. Then you can see how it did lose its strength and closed inside this previous day's range, right? So for these, we'll drop to the lower time frame to see what happened and what's the price action from the price action inside this weekly fair value gap. So we always have key time frames from which we navigate. If we go from the weekly time frame, we should then go onto the 4-hour time frame. But before the 4-hour, let's go through the daily and see what happened. So we had this weekly open here. This on Monday, we had a Tuesday, which I shorted on Monday. On Monday, yeah, I shorted on Monday. On Tuesday, I had my stop. On Wednesday, on Tuesday I also shorted. On Wednesday, I bought, but my SL was triggered. On Thursday, I also shorted. My stop loss was triggered, but on Friday I did make up, and see how we had this clear tap into that weekly midpoint, weekly fair value gap midpoint. Then we had this push higher also inside this fair value gap, and what we can observe is we have these candles respecting this daily fair value gap, right, by closing inside that daily range. If I draw this from that high to the low, this is the daily, I'll get rid of that. Just see how clean this price action is. We can see this candle were respecting these daily fair value gap. These candles never closed outside this fair value gap, but they reacted inversely inside this daily fair value gap. And now to confirm the order flow, we have to go to the 4-hour time frame and see whether we have a bullish order flow being created or coming into play. So inside this weekly fair value gap, I want us to see the price action over here. So we had these consolidation at around from these. We had a consolidation where the market was not leaving this range, but as the market moved lower, some people who had entered for shorts were taken out because we wanted to see the market rally to this level, right? But what happened is the market rallied lower, right? We have those who are early to enter, right? Then the market reversed on Sunday, took out these stops that were above here, the buy side liquidity. So the stop above here is what we call the buy side liquidity. Then we can see how this market sharply retraced into this weekly fair value gap. I'd seen this price action, we have already tapped into it. So upon seeing this movement during the New York session, I thought the market was to continue higher to this level, but you can see I was wrong for the day because the market reversed on me, rallied lower, tapped into this consequent encroachment. Then I guess on Friday I did benefit a 1 to 2, which I'll be showing you from the lower time frames. So over here, what do we observe? We usually have a checklist, which to me, number one, to those who can be writing, or let me see whether I can make my chart a little bit dirtier, because we are learning, and when learning, it is allowed for us to make these charts a little bit dirty. So let's learn something over here. Usually what I want to see is, number one, we should be in a key level. Oh no, this one I don't know, it's too thick. I cannot even write. Okay, I cannot even write. So number one thing I want to observe, hopefully you can hear me, because that's too thick. I cannot write with it, but maybe next time I'll look for a way how we can do that. Number one usually is a key level. And where is my key level? Key level is this weekly fair value gap. So we have number one thing which I usually like to observe. After I've confirmed we are inside a key level, I want to see sell side liquidity being grabbed, right? So previously you can see we had all these liquidities that were created here, all these liquidities, right? So all this sell side liquidity, including Tuesday is low, Wednesday is low, Thursday is low, everything was cleared during Friday. So we have a key level, we have sell side liquidity, or liquidity that has been grabbed. That's number two. Number three, I want to observe a market structure shift. Where is a market structure shift? So where is the previous swing point? We can take this or this, because we have candle number one, candle number two, candle number three, right? We have this swing point over here. We can see we have this candle that closed not only above, right? We have this candle that created that market structure shift. So inside the 4-hour time frame, I'll do this. We have this market structure shift, which we can see was firstly from that key level. We've seen we are inside a key level right here. You can see a good reaction of this consequent encroachment. Also, what we have observed is we have all these sell side liquidities that has been grabbed. So you can label these as sell side liquidity grab, and I usually my emoji there. something nasty. Oof. So yeah, we have that sell side liquidity, as well as we have having these 4 hour fair value gap, from which I will be anticipating to look for buying opportunities, right? FEG, and maybe I will be careful with that midpoint. I will be watching that the main threshold of that 4 hour fair value gap. Also, I want to, what I usually look at is see whether bearish array is being disrespected. And number one bearish array I can spot is we have these consecutive candles, which to me is an order block. So this order block was to support prices going lower, right? And if we see a candle closing above the midpoint of these order block, I'll delete these. I don't want to make my chart clean. So from the high of these consecutive candles to the low, and using a dark mode as my midpoint, as my order block. So this is the order block, this gray zone is my order block. And usually if we are bearish in an order block, we don't want to see the midpoint being a candle closing above the midpoint, but this order block was violated, and by that is confirmed by this candle, this heavy bullish candle closing not only above the midpoint but also above that order block. So this confirms that for me, I want to see bullish prices, because bearish arrays are being violated, whereas bullish arrays are being formed. Also, the same order block can act as a breaker, because we have a swing low, candle number 1, 2, 3. This is a swing low. Then we have a swing high, candle number 1, 2, 3, a swing high. The previous swing low was taken by this swing low. Let's take this candle number 1, candle number 2, candle number 3. So we have a previous swing low which has been taken here. Also, the previous swing high has been taken by candle number 1, 2, 3. So the bullish candles inside this price action to me is a breaker block, which happens to be now a bullish breaker, because a dip into it, which is paired with this fair value gap, forms a unicorn, which is usually a high probability trade to take, right? A tap into this fair value gap with proper price action from the lower time frame, then we should move higher. So my anticipation for the week, if I drop to the week, the hourly time frame, I want to see these low be the low hold, this low hold. But if we see a dip into this fair value gap, then I'm expecting to see something of this fair value gap, and my draw on liquidity, my first long hanging fruit first will be, sorry, and so back to where we were trying to look for the low hanging fruit first. Yeah, we want to see the market gravitate to this buy side liquidity, but also I want to look for a low hanging fruit, which is this volume imbalance. To those who don't know, a volume imbalance is when we have a gap like this. So from the open of this candle, that candle, and I want to make it trade so that I know that's the volume imbalance I'm referring to the open also of this other candle. Yeah, so this will be my first low hanging fruit. So this is the level I want to see the market gravitate to, with also paired with this buy side liquidity above there. So before seeing these previous month high being engaged. So this is my plan for the next week, because we also have over here this daily fair value gap, not fair value gap, order block, which is the last down close candle. before this bullish candle, as well as we also have these candles immediate rebalance. So I'll be watching an overlap of these candles high to this level, then see whether we have a bullish expansion higher, which I'm expecting maybe can happen. We can see a bullish reaction from probably on Monday, Tuesday, be a continuation, then maybe from Thursday we might see a reaction lower. So I will be engaging from the market in the markets from Monday because of this price action observing here. If I see a clear market maker buy model inside these 4-hour fair value gap, then I'll jump in for buying probably during the New York session. So remember to like this and follow this channel so that we may get to improve and get better all day every day. So thank you for watching. Until next time, peace.